Hello class, I welcome you all to this class 16. We are going to recap the accounting treatment of important items, those reflected in the income and expenditure account. So income and expenditure account, there are some important items where it will be located. That's what we are going to look into. So entrance fees, admission fees is a revenue receipt. We know revenue receipts, everything should be recorded in income and expenditure account. Life membership fees is a capital receipt. Capital receipt, every capital receipt should be recorded in capital fund, the balance sheet. Then special receipt, special occasions, annual dinner, all these things is a revenue receipt. Again, income and expenditure account. Donation. There are two types: general donation, specific donation. General donation, specific donation. General donation are those which are revenue receipts always. Okay, so general donation, revenue receipts, it has to be shown in income side of the income and expenditure account. Specific donation are donors which who specifies the purpose for which the donation needs to be utilized. Then it is called as capital receipts. Okay, so specific donation is always a capital receipt, so you have to show it in the liability side of the balance sheet. Now, legacy. We are going to look into legacy. New thing that we have to study in this class. Legacy means it is like a donation. It is like what? It is like a donation received by a not for profit organization under a will of deceased person. Deceased person in means it means the person who had died. So it is like a deceased person will சொல்லுவாங்க will எழுதி வச்சுட்டு they they have passed away, so that is called as a legacy. Okay, so this donation, which is otherwise called as legacy, can be of two types: general donation and specific donation. We are aware that general donation always is a revenue receipt, right? So in the previous thing also we have learned general donation is a revenue receipt, so it has to be shown in the income and expenditure account. Now, specific donation. What about specific donation? Specific donation is a capital receipt which is to be shown in the balance sheet, that is the liability side. Now, grant is received for a particular purpose, either for from the government for the construction of building or a library or a swimming pool, whatever it is. So it is a grant, it is a capital receipt, it has to be shown in the balance sheet liability side. Then you have sale or use of sports material. Now sports material, you have the stock of sports material. Say for example cricket bats, you may have uh, you know uh, shuttle rackets. All these things are sports material which have been kept. So it has stock. Stock means it is an asset which has to be shown in the balance sheet. If you consume that, say for example you have taken tenny coin, you have taken bats for consumption. Say for example you have played with it, you are playing, and once you have played, say shuttle and all, we use cocks. Cock will not stay for a long time, so it is consumed, right? Say 2 months, 3 months, if it comes, it is a big thing. So if it is consumed, then you need to show it as in the debit side of the income and expenditure account. You know that debit side belongs to expenditure account. Next, the balance, that whatever after the consumption, whatever is the balance, that will be shown in the asset side balance sheet. So whenever there you have sold, okay, whenever there is a sale of sports material, there is always either a loss or a gain, right? So if the book value, say for example book value is 10,000, sale value is 8,000, then 2,000 will be a loss. I hope that you're able to follow. Book value is 10,000. Sale value is 8,000, which means there is a loss of 2,000. Okay, so there is a loss of 2,000. Similarly, if book value is less than the sale value, say book value is 16,000, but sale value is 20,000, which means gain of 4,000. So this is what it means, right? So debit if it is a loss, credit if it is a gain. Obviously, you know those things. Now, sale of old assets. Now, we are going to just look into a calculation. So, if there is a sale of old assets, how you need to present it in your income and expenditure account. Okay, say for example, the book value of furniture. The old asset here is furniture. Okay, so I've taken this problem from the exercise question. I think the exercise problem 36. Okay, so exercise problem 36. I have taken this question so that it will be easy for you to understand. Book value of furniture on 1st April 2018 is 60,000. So we are going to discuss the problem solution. In the next class, I will be working out. So this is class 16. So I'll be working out the solution in class 17. But as of now, I'll just discuss the whatever needs to be done. So book value on 1/4/2018 is what is 60,000. Now this just clear off all the working so that it will be clear for you. So book value is so and so. Now half of the furniture is sold for 20,000. Now half of this half is what? 40,000 is sold for 20,000 on 30th September 2018. On 30th September 2018. Okay. Now, depreciation is to be charged on furniture at 10% per annum. Calculate the loss on sale of furniture. So we know that it is a loss. So what is the loss they are asked to calculate? Sale of furniture. Show how the loss on sale and depreciation on furniture will be shown in the income and expenditure account for the year ended 31st March 2019. This is the question. Now, first, I want you to focus here. Now, we need to working note. We need to do working note. So, I'll just explain you till the time permits. So, book value, opening book value is how much? Opening book value is 60,000. Did I mention it correct? Yeah. Now, depreciation, we need to do one thing. I'm just splitting this into two parts. 30,000, because we have one half of the machinery that is being sold out. So depreciation for the first half. So till 30th September 2018 for 6 months. What is the percentage of depreciation? So 30,000 into 10% into 6 divided by 12. I hope that this working is clear. I'll just highlight it. Just make it bold. Now I think it's clear now. So I think we are coming to an end of this session.